Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here since 2003, over 20 years for individual traders and professional institutions. Okay, let's get started. The last video I did, I apologize, my audio was messed up. It sounded like I was in a metal room, a lot of echo. I fixed the issue. And again, this is going to be a market, an update on the market, technical analysis for this week. The last video I did, I discussed our STS KISS systems, and let me just give you a brief update on that. So in my last video, I talked about these 7 to 8 stocks that have been leading the market, right? They've been holding the entire market up. And I said we need to see sector rotation. We're still not really getting it. But anyway, here's just a quick snapshot of those 8 stocks. And I have the Nasdaq here, triple Qs. None of the STS smart trailing stocks have been hit. Today, some of these Mega 8, let's call them Magic 8 Ball, Magnificent 7. There's a lot of different terminology, but you can see some of these starting to pull back. Look at AMD, quite extended, nice pullback the last couple of days. Still not hitting its trailing stop. Again, some of these things are quite extended. Look at these moving average ribbons. Moving average ribbons generally only get so wide before you get some sort of reversion to mean action. NVIDIA, this AI, everything's been AI on the news. Nice pullback there. We had a doji yesterday. Very wide moving average ribbons. Smart trailing stop still at 344. AVGO, that's Broadcom. Remember they had a recent deal with Apple. The Mark 13. Crazy doji candle yesterday. So extended. But again, none of these have been hit yet. And remember, guys, you can access all these from Breakpoint Trades. Again, I suggest if you're not a subscriber, go ahead and subscribe. And again, the best membership is our 6-month membership. You get about a 40% discount on time versus, say, the monthly membership. But otherwise, for now, the STS tables are free to look at. Go to the systems area, STS tables, beta, and you have these various tables. We have all the S&P 500 stocks, all the Nasdaq 100 stocks, all the top 100 ETFs, the BPT basket here. Remember, you can sort by column here. So let me sort by what's long here. So the S&P is long, the triple Qs are long, NVIDIA, all these stocks. Things like the Dow, GDX, oil services, TLT, whatever, are flat. So again, nice resource. Remember, you can always come here. You can search for a stock. Let's look at Tesla. So here's Tesla. So you can see where the smart trailing stop is. It suggests currently at 177. And if you click on here, you'll get a chart, an interactive chart that you can look at. Okay. So again, enough of that. Let's go back to the newsletter. So this is a midweek technical update on the market. It's May 31st, 2023. Let me get this is our back-end recording for our website members. I'm going to go ahead and start this right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, May 31st newsletter. Tonight's newsletter, as you can see, divided into 5 major sections, the same format as I always keep. We go over the general market indexes, look at various news, comments. We'll look at a few indicators, standouts there, bonds. We'll look at a few major sectors. We'll look at the dollar, major commodities, precious metals, GDX, and of course, trade ideas. I did add a few new setups tonight, and we've had some amazing setups here. I hope you guys are playing some of these puppies. Again, I know a lot of the focus has been on this AI kick, getting a bit bubblicious there. Again, it's going to have profound effects over time on all industries, as we know, but things get ahead of themselves, and that's what I think we're seeing here a bit. But as far as the market, we've had a nice pullback here today, especially logical pullback here the last couple days. The S&P and Qs had tested their trend lines, resistance areas yesterday. And again, even today, the AI craze stocks finally pulling back some, after some extended blow-off moves. Like I've been stating, the market cannot over time sustain a rally with 7 or 8 stocks. We must see sector rotation. Again, AI is going to have a profound effect on the world and all industries, but it's going to take time. In short term, prices get ahead of themselves with the hype. Okay. Today, some economic news. The PMI came out at 40.4. Think about that, guys. And the forecast was 46.5. Below 50 is contraction. So that is super low. It's more signs that the economy and things are slowing under the surface. Okay. This week, commodities have been smashed, but except gold and precious metal stocks have been up. Remember, we favored a bounce at the end of the last week with that, as those came down to some areas to rally. Again, I'll talk about all those when we get there below. But let's go and get started here. Item number 2 shows the index sector table, what transpired today and this week. Now you can see the indexes were down. Now it shows the Wilshire 5000 up 1.5%, but I can't for the life of me understand how that's possible. It's supposed to represent 5,000 stocks. I think it's technically 3,700 stocks, but what the heck would have made it go up this much? I don't know. To me, it seems like a misprint, but if you know, you can let me know, send me an email, post something on YouTube, whatever. But everything else is down today. Russell down 1%, Nasdaq and S&P down 0.6%, Dow down 0.4%. And for the week, everything's down. And again, today, most of the sectors were down once again, except for, now what did bounce today were some of those defensive sectors that have been weak. Drugs, utilities, healthcare, real estate was up a bit, but losses across the board here. Energy's been weak lately, as you know. Financials today, transports, banks, and technology pulled back. Currencies, US dollar up a tad today, just slightly up for the week. Cryptocurrencies all down today, down for the week. Commodities have been pummeled this week. Look at this, every single commodity down here except for the precious metals. But crude oil down 6% for the week. DBC, that's the index, down 3.4%. Natural gas down 6.25%. Temperature's been a little colder than normal, so that doesn't help that. And copper's down. Today, again, just a slight little rebound in some of these ags. Precious metals have been up, gold, silver, GDX, the miners, they've been leading. Remember, last week they finally came to a support area. We were looking for a rally, and that's been playing out. Today, the nice rally this week so far in bonds. They got oversold, and nice pullback in the 10 and 30-year Treasury yields. Next. Item number 3 shows the economic news calendar. Again, I already discussed the PMI, which came in at 40.5. Just, again, way below forecasted consensus. Definitely contraction there. Tomorrow, we have ADP for June 1st, initial claims, ISM, a lot of little stuff. And, of course, guys, being the new month, June, we have the jobs report, okay? That's going to be a big one. Next. Image number 4, here is the this large image. I discussed this on the weekend on my video on the STS KISS systems. This shows you those Magic 8 Ball 8 stocks that have been leading the market. Google and Nvidia and AMD and Meta, Microsoft, whatever, and the Qs. None of these DV or STS smart trailing stocks have been hit, but we are starting to see some pullbacks here. Look at AVGO on the bottom left there, the Mark 13, but yesterday got super extended. I was lucky enough to sell my shares on that move, and nice pullback in AMD the last couple of days. Nvidia's pulling back after yesterday's doji. You have Meta, you have a DeMark 13. So, and if you look at these moving average ribbons, they're getting very wide. They may need to go through a period of consolidation. Remember, things go through, expansions and contractions, and these need to revert back to the mean. Next, let's talk about AI a bit, since everything's been the AI craze. It's going to fix all our problems. It's going to solve global warming. It's going to give us all six-pack abs, right? It's going to solve San Francisco homeless problem. That would be a neat trick. But anyway, here's an example, fun stuff. I showed this to our subscribers. So this is an image here, a pretty neat little clear image. This was made with, oh, I can't think of the name now. Got a blank. Midjourney. Midjourney. DALL-E is the other one. It's an AI generator for images. So here's the text that generated this very clear image. It looks like it was taken from a camera. So make a crisp, high resolution image featuring a chic penthouse apartment in the heart of Bodrum, blah, blah, blah. But it's really amazing how specific you could be with some of this. So you put the camera, I want this image generated with a Canon EOS R5 lens, 85 millimeter, aperture settings, shutter speeds, and this is what it came out with. That's pretty damned impressive. Let me show you some other examples. So image number 6, this kind of goes on the theme of my video from the weekend where I talked about the STS systems. So I talked about, this was the image used to generate this. This is what I typed in to Midstream. AI Jesus bestowing the blessings of AI on the unwashed masses, make it ultra detailed 4K codec film, and that's what it came up with. So a couple examples of AI, like literally you give it a description, it generates an image for you in about a minute. These are uncopyrighted. I didn't have to go pay $200 to a graphics designer. Again, clearly this AI is going to have profound effects on many industries. But again, it's going to take time, and I do think the market, some of these stocks got a bit ahead of itself, but I just wanted to show you some interesting examples. Next, let's move back to the general market. Let's talk about the S&P 500 first, our proxy, even though lately the Qs have been the mover. So here's the S&P daily. Again, I've showed you this chart for weeks and weeks. We put in that trade low in October where we had 5 clear waves to the downside. 1, 2, 3, 4, 5. Whenever you have 5 waves, you have divergence, that always sets a decent market low or high. So that was a good area for the market to expect a decent counter trend rally. We've had a good rally since then, albeit it hasn't been a straight up move. It's been a series of, higher lows, uptrends, pullbacks, uptrends, etc. But you can see we've had this expanded coil here. Price tested the expanded coil yesterday, logically pulling back from it. Remember this area, there's an open gap there at 42.28. By the way, not open gap anymore. That was finally filled yesterday. So after we filled that, we've had a logical pullback. If we can form another higher low somewhere in this area, we'll see if we can move up to these other areas, these other channels, 61 fib, etc. Okay. Next, chart number 8. Here's another daily chart. Shows you these possible wave counts. I discussed these on the weekend. The super bullish view for in a bull market would be we're in a wave 3 up. It's hard for me to favor that view, so I don't. Right now, I favor one of the other 2 views, this being a wave C up in red or a wave 5 of an Indian diagonal. Again, we filled this open gap yesterday, pulling back a little bit. This is your support down here. These are some of your long-term resistance areas. Next, chart number 9. Here's a half-day chart. Shows you, zooms in on that expanded coil where we tagged yesterday, pulling back from it. Haven't broken any uptrends yet. Next, chart number 10. Here's a 60-minute view showing a channel. And we got near the upper portion of the channel yesterday, pulled back, not quite 50% fib of that move up. Pulled back late in the afternoon. Again, we're right in the middle of the channel. Next, chart number 11. Here's a 30-minute chart. Steve showed this last night. Again, if you're watching YouTube, Steve does our other newsletters. He doesn't post to YouTube, but anyway. So this shows a potential wave count where this pullback was a wave 4. The issue is if this is the correct count, you got a wave 1 here. Remember your Elliott wave, wave 4 cannot overlap wave 1. So this is already pretty deep. It really needs it to stay above this if this is going to go up in a wave 4 or wave 5 if this is the correct labeling. The issue with wave counts, of course, if they're subjective and there's always different counts. Next, chart number 12. Here's a 10-minute view. Again, yesterday after tagging that resistance channel, remember we filled that open gap from August of last year at 42.29. Perfect area to go short. We pulled back, broke this channel. We were roughly 50% off of the pullback of the uptrend here at the lows today. Rallied and we pulled back the last few minutes of the day. Next, chart number 13 is a 15-minute view. Last week we had a nice long opportunity off this demand zone. Rallied up, got overbought. This is a supply zone where we rallied up to this afternoon and logically pulling back from. Finally, chart number 14, here's a 5-minute view showing some wave counts. Again, this is a short term, but again, here's an example. At the lows this morning, we had 5 waves down. Remember, when you have 5 waves, you expect a trend change, and we got it. We can now, today we counted 5 waves to the upside intraday, and that led to a pullback in the afternoon. That 5 waves is potentially a positive that could be wave 1 of 5 maybe. We'll see tomorrow. Next, chart number 15, here's the daily KISS trend system for the S&P. Remember, this went long back in March. Remember, you can check that from the STS tables. No new smart trailing stops here lately. It's still stuck there from last week at 40.66, still pretty wide, giving it room. Next, chart number 16, here's the 4 time frames we like to follow. Kind of messy lately, the 78-minute chart here. And we've had that resistance cycle where prices clearly pulled back from. So that was a good area for the market to pull back. Plus there was a DeMark 9 recently there. You had a support cycle down here where price rallied off of off my birthday at May 24th. And you had a DeMark 9 there at the low. You had a DeMark 9 at the highs. Lately, the DeMarks have been pretty good on the hourly and 78-minute charts. Next. Moving on to the triple Qs, chart number 17, here's the daily Qs. So we've had this wedge-like pattern drawn, but really we drew another line here, more like a channel where we tagged yesterday. Black candle, those are always an area where the market usually kind of finds some resistance. Your 14 RSI overbought, so a little pulling back there a little bit. Next, chart number 18, here's the daily KISS trend system. So no new smart trailing stops here. Remember, we got a new one last week at 334.70. So quite a bit tighter than the S&P. Remember, this one went long back here. Pretty good entry back there. And again, this is an example of the KISS systems. It went long there in January, then stopped out in February, but then righted itself and got back long in March. So the systems aren't perfect, but sometimes they'll stop out and then get back in. But that's fine. It's like a trader. Next. Chart number 19, here's the 4 time frames for the Qs. Again, here's the 78-minute chart at the bottom right. You can see that resistance cycle that is capped prices. You also had the end of bull cycle there. And we're still above the ATR and all the time frames for now. Again, moving average ribbons got pretty wide. Look at that 195-minute, very wide. And that may need to work off a bit. And next. Chart number 20, here's a 2-hour chart of the triple Qs. We've been showing this perfect channel. This trend line up here is kind of off scale, but you can see well-defined channel. This is a parallel. The trend line up here is parallel to the bottom one. And yesterday, price perfectly tagged that upper channel line. Just a beautiful area for pullback. Just a great example of technical analysis playing out. Next, chart number 21, here's a 15-minute chart. This shows you this wave count potential, wave 1, 2, 3, 4. Now you can see this 4 is not deep like that S&P 15-minute. So we'll see. If this is the correct count, I would expect an eventual move up in a 5. Now once you have 5 waves up, guys, right? If that plays out, 1, 2, 3, 4, 5, then I would be looking to take profits because after a 5-wave completion, you always get some sort of trend change. So that's something I'll be watching for if that plays out. All right, so that does it for the market, guys. Let's go ahead and move on. I don't have IWM here tonight, so let's go ahead and move on. Chart 22, here's the VIX. So the VIX, remember, these are two nice buy signals for the S&P whenever the VIX was outside its Bollinger Bands, closed back inside once it occurred in early May. Calculus? And
probably not per se.
Sorry about that, guys. CNBC started playing on my other monitor. I had to mute that. So you can see that buy signal from a week ago when the VIX closed back inside its Bollinger Bands has played out. Currently, the VIX is basically right in the middle between its Bollinger Bands. Next. Chart 23. Now let's talk about the elephant in the room again. Still, nothing's really changed here. This is the S&P versus the equal weighted S&P. And again, you can still see, you just have a few stocks leading this market. So the equal weighted stocks are lagging. They are declining while the other, the large 7-8 stocks have been going up. That is not sustainable long term. We need to see this right itself. Otherwise, the market, I feel, could be due for a nice pullback correction here if this does not correct itself. Next. Chart 24. Here's another example of this, and this plots the S&P equal weighted versus the S&P as a ratio. And when you look at the ratio, it is literally straight the frick down. Look at that. So one other one. Chart 25, here is a breadth indicator with the NYSE advanced decline in issues. And again, you can see how, guys, usually this stuff moves together. Look at this. Indicator move in lockstep with the S&P there, right? Just lockstep. But look what's happened here. You have this big old divergence. Here's the equal weighted, continues lower. Here's the S&P. So this is still glaring as an issue unless it's resolved. So again, market continues to hold up. We respect that, but you still cannot lose sight of this, guys. You have to keep an eye on it. And so we need to see sector rotation. We need to see these other stocks starting to participate in the market. If they do not start doing that, the market will not be to sustain itself. Okay. Next. Chart 26, here's high yield corporate bonds. Again, they're one that's been underperforming the market too. Otherwise, we're still in this coil-like action. Still below the 20, 50-day moving averages. Next. Chart 27, here's a 2-hour view. This channel, that's one thing to monitor it. Still inside of that. Next. Chart 28, here's high yield or TLT 20-year bonds. As you know, interest rates have been rallying up, but this got very oversold last week, finally rallying up a bit. There is a potential little resistance here. You have the 200-day. We'll see if it can clear this. Next. Chart 29, here's a 2-hour view of TLT, and we showed this last week. Why have bonds rallied here and rates pulled back? You had a textbook falling wedge with MACD divergence, RSI divergence. Everything was set up. And by the way, TLT has now exceeded its symmetry. So your first target of these wedges are always the height of the back of the wedge. That has now been exceeded. So that points to a potentially better bottom in the bonds. Next. Moving on to the major market sectors. Chart 30, here's major market sectors. Again, most sectors were down today. There's transports. XLE has been super weak. It's below its lower Bollinger Bands. There's financials been weak. Banks are weak. Here's your technology. Got outside its Bollinger Bands yesterday. Now it's back inside. XLI Industrials, etc. Next, let's examine a few of these sectors individually. Not going to look at a bunch of them, though. Here's XLK Technology. Again, you can see it got into the supply zone yesterday. Very extended. Look at your RSI 14. Rarely gets overbought, but finally pulling back from that supply zone. Way extended from its 9 EMA. Next. Chart 32, here's semiconductors. Same deal. Was way outside its bands. Again, you got a lot of stocks like NVIDIA and Broadcom, AMD in there. So it's pulling back from that black candle. Next, Trevor 33, financials. Financials and banks have been weak here. Next, Trevor 34, healthcare. This is trying to bounce today, rally. Again, some of these defensive names trying to rally a little bit. Moving on. Trevor 35, DBC Commodities down 3.4% this week. They continue to move down. They peaked in June of last year, and they've been down ever since. It is now testing its 200-week moving average. That's an area to watch. Let's see if it maybe undercuts that and then reverses. Not sure, but that's an area to watch. Next, Trevor 36, here's the daily view. Again, nearing this lower trend line. Next, Trevor 37, crude oil. Broke down from this little kind of bear flag. Again, as you know, 200-day moving average has been resistance since August of last year. Next, Trevor 38, natural gas. It was trying to form a base here, broke out of it a little bit. It's so far hasn't really found resistance or support at the extended trend line here. There's still hope that it can do that, but it needs to start trying to bounce here if it's going to do so. Next, Trevor 39, copper. Bounced off that lower trend line, but obviously in a downtrend here. Next, Trevor 40, base metals. They also bounced recently, unable to get above their 9 EMA so far. Next, Trevor 41, DBA agriculture broke down from that coil last week, so still trading below that, still above its 50-day, very choppy here. Next, Trevor 42, Bitcoin. Here's the pattern we're monitoring right now. Right now, this short-term channel. Next, Trevor 43, US dollar, ETF, UUP. Up again today, but black candle. There is a little slight RSI divergence here on the 5 RSI didn't mark it, but if this were to pull back, maybe that'll help things like some of the commodities. Let's move on to precious metals. Trevor 44, gold. So gold, like I said, we expected a bounce in gold. First off, coming into May, we expected a correction in this area. Gold is seasonality weak in May. Plus, you had a rising wedge here. You had MACD divergence. Everything was set up for a correction, and we had gotten that in May. Okay, and basically it pulled back to a symmetry area. See that? And this perfect uptrend line from the November lows connecting the March lows and of course the May lows. So that was a logical area to buy some GLD. Nice bounce. Again, price has got to now contend with the 20 and 50-day moving averages above. Next, Trevor 45, here's a daily version of the ETF GLD. Again, tag that channel, bouncing off of it a little bit for now, giving you a little trade. Next, Trevor 46, here's a 60-minute view. Again, you had 5 clear waves to the downside and logically expected a bounce. We got that. Now, so far, the bounce has not broken symmetry. So far, bounce has stalled at that symmetry. Next, Trevor 47, silver. Also bounced here the last couple days. Next, Trevor 48, GDX. Again, GDX, is, also had a really nice correction, got down to the 61.8 fib last week. We were looking for a bounce. Nice bounce today, good volume. So far, the bounce is stalling at the 9 EMA. Okay, if we go down again, you have this uptrend line to monitor. I still think it can work up higher here, though. Maybe the 20, 50-day moving averages over time. Next, Trevor 44, here's another daily chart. Again, we got into this demand zone, potential ABC pattern. Prices bounced off of that for now. But short term now, we got to clear the 9 EMA here for this to extend. Next, Trevor 50, here's GDXJ, same pattern essentially. Next, Trevor 51, here's a 2-hour chart of GDX. Remember, we were monitoring this trend line on the GDX-GLD ratio. The stocks lead the metal, so you always want to watch that. and you had a downtrend line on price. So that triggered today for a long. If anyone took it, I took some off. But we'll see now if this, little pullback and if it can work higher. Next, chart 52, GDX 60-minute chart. Again, you had a nice trend line break here. Again, so far it hasn't exceeded its symmetry though. So what I mean by symmetry, here's the start of that downtrend in early May. This was your first major rally. So you clone that or mark the height of that rally, lower high. You could see this rally was roughly similar, didn't break it, and using that same length of line, we did not break that yet here. But again, I do have hope that maybe this can form a higher low here and push again. All right, guys, now let's look at some individual stocks and trade ideas. First off, chart 53, Target. A lot in the news about, the woke stuff and all that. I'm not going to get political. But you can see Target, when it topped out 2021, big sell-off 2022, recently broke a big pattern here on the weekly. Here's your next demand zone, guys, 110 to 120. To me, that looks like a logical target at this point now. Pun intended, pun not intended, whatever. Next, chart 54, Target on the daily. I mean, just look at that brutal sell-off. Holy cow. Again, just how many down candles do we have here? 1, 2, 3, 4, 5, 6, 7, 8, 9 down days in a row. That's the mark. So maybe we get a bounce here anytime, just some sort of oversold bounce. But boy, oh boy. Next, chart 55, Anheuser-Busch. This bud is not for you. Remember the old commercials, this bud's for you? Well, this bud is obviously not for you. At least that's what or not for us, that's what the public's saying. The Dylan Mulvaney controversy came out there in early April, and the stock initially pulled back, and then it rallied all the way up to basically have a double top. And I am kicking myself for not just backing the truck up, buying a buttload of put options, shorting the hell out of the stock, because, look at that. Just ugly, ugly. All right, moving on. Chart 56, Apple Crapple. Always got to watch this puppy since it's, the biggest weighting of about everything. So you have this wedge here. So far you can see price has been stalling at this upper trend line of the wedge. And you got a couple dojis here. So that is noteworthy. If that wedge were to play out, like if this were to be a top here and come down, that would obviously, market would pay attention to that. So we'll see. Next, chart 857, NVIDIA, as you know, the AI craze, just unbelievable move last week, way outside its Bollinger Bands, black candle, doji yesterday, logical pullback today. Again, some of this stuff got way ahead of itself, guys. Next, chart 58, AI stock, again, way ahead of itself yesterday, pulled back an inside day today, though. It's still outside its upper Bollinger Bands. Next, chart 59, Path. Here's another AI type stock. Big volume today. This one is up, testing the resistance here if you want to try to play that. Next, chart 60, Netflix. This was a long idea of mine a few weeks back. This coil break. Broke the coil, back tested it. Just absolute textbook how that worked. Moved up last week. I said it was bull flagging. That played out, rallied up. Really nice trade. Next, chart 61, Tesla, been moving up here. It closed above its 200-day moving average. Next, looking at some past trade ideas of ours. Again, we've had some awesome ideas here, guys. Plantier was a long idea I had back in early May. It was a cup and handle breakout, and look at this puppy. Just unbelievable move from this 1030 area if you went long there. Again, was just a textbook play. You had the volume. Everything was set up. And if you're still long, you could simply just trail a stop below that 9 EMA. Next, chart 63, CMO was a long idea of mine over a week ago with clean resistance at 55.65. You had your RSI divergence there. Everything was set up. And look at this puppy, rallied all the way up to the supply zone, 200-day moving average. One hell of a percentage move. Next, Chart 64, IONQ, another long idea of ours from a couple weeks ago at this trend line break. Hell of a move. Congrats if you took it. Again, you could still be long with the stop below the 9 EMA. Next, chart 65, NNBR, another one, was a long idea of mine. Out of this pattern, it played out beautifully to the 200-day moving average. Look at those volume patterns, which is gorgeous. Next, chart 66, pool was a short that we put out. Broke its trend line yesterday, followed through today. Next, here's some new setups to monitor, guys. Not exactly, some of these aren't new. So CRMX was a long idea of mine a couple weeks ago off this wedge. It played out beautifully with a big move up. If you bought it around here, this wedge break, again, heck of a move up to $1.50. But look at this. That was a big move up in volume, strong volume, light volume pullback. What kind of pattern is that, guys? Bull flag. This is your supply zone, so I am favoring another eventual breakout up to that point, to the supply zone. Next, chart 68, CELH, one from Steve. He can count potential 5 waves. This is wave 4, so we're looking for an eventual move up in wave 5. Next, chart 69, NNOX was one I posted today. It's coiling. No changes here. Still in the coil. Watching this one. Next, chart 70, BPMC, one from last week. It's still valid if it can clear this 60 area. Next, chart 71, run. A long idea if it can break its downtrend line. Next, chart 72, AGNC, another long idea to monitor over this downtrend line. Next, chart 73, global. Here's a new one, just a simple breakout, nice volume patterns, breaks out over 36.10. Let's see, today's highs were 36.03. Next, chart 74, KNTE, some sort of pharma stock, kind of a flag channel pattern, nice volume. Right at the 50-day moving average, 435 is your resistance. Next, chart 675, LYEL, breaking out of a nice, first off, nice base here for me. Good volume today. Breaking out of a little ascending triangle. It already broke out, but watching this for some Momo. You know, today's high is 323. You could take a shot at it over there, see if we can get a follow-through move. Next, chart 76, Disney. Someone posted this, potential wedge, something to monitor too. All right, guys, that'll do it. Let's see. Quick check on futures. ES futures are up about 5 points tonight. We'll see what happens tomorrow. Have a wonderful evening, and thanks for all your support. Really appreciate it. Take care.